Many Kenyans are quickly embracing digital money lending as a way of acquiring credit away from the traditional financial institutions. But what are the pros and cons of the digital cash?
Sasa ukiapply hiyo pesa unapewa, tunainua biashara yako, unalipa kidogo kidogo mpaka bora umekamilisha hiyo, kama ni mwezi mmoja umekamilisha.
We see this service as a way of expanding the financial inclusion.
What should one look out for when acquiring the loans? And if you must get one, for what purpose?
There is an obligation on the lenders, for example, or the regulated entities to educate the consumers on the features of the products that you are offering.
It has led to the growth of other sectors, including e-commerce services.
On this show, demystifying digital loans, and we speak to users, lenders, stakeholders, and policymakers. Welcome, I'm your host, Alex Chamwada, and we begin with our fact sheet.
In Kenya, there are about 46 million active mobile lines with approximately 7 million mobile loan users. Currently, there are over 47 mobile loan lenders in the market, comprising regulated and non-regulated digital lenders. Some of the notable ones being Zenka, Tala, Branch, Mshwari, KCB Loan, and now Stawi, among others. According to Financial Deepening Sector, abbreviated as FSD, the market has grown fast. Mshwari has disbursed 230 billion Kenya shillings worth of loans since inception in 2012, while KCB, the largest lender by asset size in Kenya, provides 90% of its loans through its KCB M-Pesa platform. The financially excluded Kenyans prefer mobile loans due to a number of reasons, including convenience, disbursement speed, interest rate, trust, collection practice, privacy, loan size, with fees charged being the least of the concerns to the borrower. Digital credit adoption has been greatest among adults in urban areas. In Nairobi, about 1 in 2 mobile phone owners has used digital credit. Rural mobile phone owners are about half as likely as those in urban areas to use digital credit. Men are more likely to take mobile loans than women, especially in rural areas. Men are also likely to juggle more than one loan at a time. For the Chamwada Report, my name is Michael Zimanja.
"42-year-old Francis Kimani, a vegetable vendor at Ngara Market for over 17 years, is a beneficiary of mobile money lending. Kimani, like many other small business owners in the country, has encountered hurdles in the past when it comes to financing business, but the coming of mobile loans into the market, he says, has made access to capital easy.
Zamani kufollow loan kwa bank ilikuwa shida sana. Lakini sasa hii kwa mkulima mdogo mdogo amefikia kupata loan kwa simu kwa njia rahisi sana. Tulikuwa tunajua kitu kama loan ilikuwa ya matajiri. Lakini kwa sasa imefikia hata mtu wa kiwango ya chini. Kwa sababu bereni sisi ukienda kwa apply loan unaitishwa guarantors. Kuja na guarantor, kuja na ule mtu akaunti yake ni mzuri. Kwa simu hakuna maswali kama hiyo.
Kimani seems to be among those who have learned the ropes of juggling between several digital loan applications without running into trouble.
Wakati nilianza kuchukua loan, mara ya kwanza nilipatiwa shilingi 200. Nikakuja nikalipa nikapatiwa 500. Sasa hii napatiwa hata 150.
Tom Wafula, who is employed as a boda rider, also acknowledges the importance of mobile loans.
Kuna wakati zingine biashara inaweza kuwa chini na una mahitaji ya pesa. Unakopa ukijua probably next week nitapata na nitalipa. Na inanisaidia for that emergency, alafu within a short period of time na repay back.
However, there are those who have had negative experiences. Like the traditional loans, if not used properly, digital loans can bring financial stress. Above all, defaulting can bring further woes, and some users do not like the manner in which they are pursued by lenders.
Yani tuseme uko na loan na msee, si ndio? But sasa details zako yani wanashare na kila mtu. Edwa lipangi loan, unaona? Na si poa.
One of the risks is misuse of this credit. The second risk is about over-indebtedness. This technology is giving us easy access and exposing us to the risk of over-indebtedness.
What exactly is the difference between mobile loans and loans acquired from regulated banking institutions?
Bank loans are offered by deposit-taking institutions. When you say deposit-taking institutions, these are institutions that are taking money from the public, and they pay them very little return for their deposits, and they use that money to lend. So because of their cost of funds is very low, then they are able to offer loans at a lower interest rate. Remember again, bank loans are long-term loans, and they are huge amounts of loans. They could range between $500,000 to over 10 million, 20 million. That is the typical banking loan. And they are long-term. We could be talking about 5 years, 10 years, 6 years, 3 years, anything around that. Mobile loans, on the other hand, are short-term loans, and they are little amount of loans, and you are mostly lending to high-risk borrowers, and the verification for these customers is done on mobile. You have no face-to-face interaction with this customer, and the verification is actually done through algorithms on the mobile platform itself. So it has no face-to-face, and therefore the risk to the lenders is quite high.
Indeed, digital loan lending, more so the use of mobile phone technology, is slowly and steadily redefining the financial landscape in Kenya.
Definitely, digital credit, since we launched 5 years ago, has now grown at a tremendous speed. When we first came in, it essentially was Mshwari had come in first, swiftly followed by Tala. But now when you look at it, there are over 45, actually almost 47 digital lenders. And the problem with some of that fast growth is that there are different actors that are now playing. Some actors have not conducted themselves to the highest standards of consumer protection. And so what Tala and a number of our members have decided to do is to create a Digital Lenders Association. And what's critical for us in the association is to make sure the general public know the difference between what some people call digital Shylocks from those who are truly trying to drive digital credit for financial inclusion.
You know very well how difficult it is to access credit in this country. You either must operate a bank account for about 6 months or have security or collateral. A lot of Kenyans, because they do not have jobs, they don't have salaries, they are unable to obtain this level of financial credit history to be able to access loans.
Digital loans, in other words, have disrupted the money lending system.
What we have done is to provide access to them in a way that is easy and as user-friendly and without the intimidations that they have to go through when they have to get a typical bank loan. We are bringing people who otherwise would have been stuck outside the periphery of financial inclusion and migrating them gradually from that position to a position where they can access the formal sector by starting them off at a level that they can manage and that is commensurate to their status.
The exponential growth in mobile money lending is because there is demand.
As long as that gap is there and there is that unmet demand, Kenyans will always find alternatives in terms of going to those unregulated providers which cannot be met by the regulated providers.
The question is, do borrowers of digital loans understand the do's and don'ts, or the pros and cons of the loans, as well as the terms and conditions of the loans they are getting into?
What is more proper is that the industry as a whole takes up that responsibility and drives that initiative. And this is one of the initiatives that we are driving through Digital Lenders Association of Kenya. We have joined up with an initiative within the Treasury, the National Treasury, Ministry of Finance, and we are collaborating with them to in a project whereby we are going around the country to enhance the user awareness and financial literacy among users, especially around this digital lending space.
And so some of the principles we adhere to are things like very clear and simple pricing. You know, a customer should know, if I take X amount from you, how much will you charge me? If I do not pay you, what will happen? How much more will I be charged? To what extent am I authorizing you as a digital credit provider to use my information?
According to the Bankers Association of Kenya, regulation is important in order to protect the consumer besides enhancing awareness.
If it's under a regulator, some of those consumer protection issues will enforce transparency where the lender is obligated to disclose some minimum information. For example, the price must be disclosed fully to the point where you're saying it is 10% per month paid upfront or at the end, whichever, but it needs to be disclosed. So you don't take 10% and you leave it hanging in the mind of the consumer, so the consumer thinks it's per annum, because that's a normal pricing methodology. And yet you actually meant per access. So my assumption is that it's 10% per annum. If I borrow for only a week, it will be 10% divided by 52 to get me the equivalent per week that I'll pay. You have not told me that even if I borrow for a day, it will be 10%. You see? So those disclosure requirements in terms of transparency, when there's a regulator, you enforce them. Things like consumer protection, things like, for example, financial education. There is an obligation on the lenders, for example, or the regulated entities to educate the consumers on the features of the products that you are offering.
We want every person who's a member of the Digital Lenders Association to be, upfront with the fees from the very beginning. The other thing is what kind of data they are taking. We also want that to be, fair, honest. Tell the user why are you taking M-Pesa statements, for example, so that the user understands the importance of these kinds of data and why they're giving it to us. And then the third thing is to make sure that the user is getting the right kind of product.
While some see the growing mobile lending sector as a big boost to socioeconomic development, the Central Bank of Kenya is warning that not all is well.
Self-regulation, in my view, is what importance is to self-importance. I think we need to think a little about that, meaning there's no such place for self-regulation.
But industry players insist that digital loans are not necessarily a bad thing. It all depends on the usage.
Tell ourselves, several years ago, we sought out to understand, well, what do our customers do with our money? And we discovered over 70% of our customers are using our capital to reinvest into their small businesses as a form of working capital. A small proportion is also using it in case of personal emergencies. On a wider scale, when you look at the digital credit industry, a report commissioned by the Financial Sector Deepening Trust of Kenya essentially showed that using digital credit for betting represents perhaps less than 3% of all total lending. I think that what has happened is that there's the 3% that has gone into sports betting has essentially overshadowed perhaps over the 97% of digital credit that's actually being used for consumers, right? For business, for family emergencies, for consumption. So our belief is that the benefits of digital credit far outweigh the negative uses that have come out from digital credit.
We have gone out basically to offer this loan for those people who have, let's put it this way, they're the small-scale traders who typically do not have collateral. They do not necessarily have a long history with any bank. They won't get guarantors to go to the bank with. They don't have high turnover to justify a huge facility. And what they need is short-term working capital to facilitate their trading activity.
Statistics show that many borrowers are aged between 21 years and early 40s, mostly men. The users are mostly in urban areas. Experts say the other positive aspect of digital lending is that if used well, it can enable users build their own credit history.
It's the values. It's small. It brings down the values to small amounts so that even the very small person can be able to access credit.
On that note, we take a short break. When we return, we will bring you more about the debate on regulating the sector. Stay tuned. Welcome back. Today we are discussing the pros and cons of digital money lending and the debate about regulating the sector.
Loan ya simu inanisaidia sana kwa sababu hakuna mwenye anakupeleka speed. Uko tu slow, nani unaweza pata anytime. Saizi ukitaka hiyo loan unaweza pata. Ya bank lazima ungoje mpaka kesho asubuhi bank ifunguliwe ndio uende kwa bank utoe loan.
They have some interest that you must pay the money. When, for example, if I take 1,200, if it took me some weeks, you'll get the money now increases up to 1,500, which is very difficult for many people to pay.
Nikipata kidogo na warushia. Si zote na kama like 5,000 na warushia. Nikipata zingine na warushia, but nikiwa nimebakisha few days nilizo kwa CRB na nipa zote.
Imenisaidia especially wakati nilikuwa kwa nyumba sikuwa na job, ndio nilikuwa na survive nayo sometimes.
Now you enjoy digital loans when they hit your mobile phone and your credit improves with good repayment. However, stress sets in when you default and lenders are pursuing you, and one of the consequences is being listed at the Credit Reference Bureau.
It's unfortunate that everyone has a negative perception of a CRB, but in actuality, it's actually a very positive thing and something that people should be actually driving and keeping a close look on, because it's technically your credit CV. It's a CV outlining your payment behavior for a lender to be able to determine if you are good risk or not for them.
But what happens when you get listed at the CRB?
That credit history is noted, and you cannot, if your record is shared amongst other lenders. So if you go and try to borrow somewhere else, someone will be able to lift up and see your history. What really happens is after listing, you can get yourself delisted. If you go back to your financial partner and repay the loan or agree on a repayment plan, then what happens is that the financial partner goes back, updates your information.
So when we report your positive loan behavior, it improves your credit score. So over time, and I have to say that's probably 80% of the borrowers. It's not all of them who default. So 80% by borrowing and paying improve their credit score, and we report that to CRB.
I think there's been a lot of focus on the number of individuals that have been listed negatively. However, for the vast majority of lenders, and I'd say anywhere from maybe 80 to 90% of our client base as a group of digital credit providers have not been listed negatively. So I would say that it has not dampened the appetite. I do believe that there's a need for greater consumer awareness around, how does one end up being listed? How can one avoid being listed? What does one do when you're listed? I do think there's definitely gaps of knowledge around that. But in our opinion, the vast majority of people who have access to credit have not been listed negatively. In fact, they have been performing, but we definitely do recognize the need to address those portions of the people who have been listed and make sure they're aware of why this is happening and what they can do to reverse it.
Zenka, which entered the Kenyan market in December 2018, says it has given an incentive to its first-time users that is geared towards transiting them into credit history building.
We have offered for first-time users a cost-free loan. Okay, so in other words, we will give you the loan, you will pay back only what you borrow. If you borrow 3,000 bob, you will pay us back 3,000 bob. So long as you pay back, we are fine with it. Okay, we'll take the cost.
You could have an individual who was listed, for example, with an outstanding of 100 shillings. But this is 8 months, 9 months down the line, and he can demonstrate from the same report that there are other facilities that he's paying. That does not put that person at risk because he's showing that he can pay.
The other area that is critical in awareness creation is security. Mobile phone technology and the presence of a myriad of apps in the market, including mobile money lending apps, expose users to a number of risks.
If you look at the mobile money, most of the time is that before you get a loan or before you register yourself, you need to give a lot of your details. So the other level is how secure and safe are your details when you give them to these lenders.
We easily provide our email addresses, we easily provide our personal phone numbers, we easily provide this information in this digital space without paying attention to who has access to this data. And the person that I've given to this data, what are they going to do with it? This is the vigilance that an individual needs to apply. Physical safety, cybersecurity safety in this is my information. I need to jealously protect it and not just share it freely, and also figure out that the person I'm sending it to, how do I make sure that they hold accountability and responsibility to that data?
The presence of your personal details in the cyberspace means your privacy is at risk.
The cyberspace is basically the technology world. The technology world is made up of networks of different computers, different devices, which are interlinked. So that brings up the cyber network or the cyber world in its own. So a cyber threat or a cyber attack is basically the infringement of privacy of data sitting on your cyberspace.
Hackers can use certain commands to copy all your contacts and messages, steal your airtime, or send a command to all your agencies.
Minimize what you do on that free Wi-Fi. Things that are a bit more sensitive, accessing your email, accessing your bank account, making payments, those ones should only be done on an environment that you control.
Amid those challenges, the biggest debate currently is whether or not to regulate mobile money lending, and if so, how and when.
All I can say is these online lenders, we have not licensed them. So there's a bit of a, caveat emptor, right? Which is really dangerous.
We know that this particular sector is not formally regulated. In other words, we don't have a statutory regulator. However, we feel that we can take on the responsibility to enforce the standards, minimum standards, so that we have a professional industry which caters especially for the consumer, but more so for the broader society and for all stakeholders involved.
Indeed, professionalism is key in order to bring confidence in the sector and protect the consumer. For the Chamoda Report, I'm Tony Sanya.
On that note, we come to the end of our show. Today, we discussed digital money lending, pros and cons, and the debate about regulating the sector. Remember, you can watch this show again on our YouTube channel, that is Chams Media Channel. On behalf of the Chams Media crew that made this production possible and our broadcasting partner, KTN News, many thanks for watching and see you again next week.